Now let's switch gears and dive into the ever-evolving world of unconventional investments. From NFTs to Bitcoins, these new asset classes, they've certainly made waves, but let's not forget the allure of more traditional, nuanced investments like art and antiques. So how should family offices handle these assets without tripping over momentum-driven plays or even falling victim to what we've been discussing in the first half of the day, which is FOMO, and how to move to JOMO? To answer these questions, we have two experts with us who will be led into conversation by Priyal, who will be joining us. Please put your hands together for Vatsal, Kanakiya, CEO of 100X VC and partner at Mehta Ventures, Juhi Agarwal, CIO at Scan Holdings Private Limited. Welcome. Yes, Priyal, please join us on stage. Everybody, can we welcome them with a warm round of applause? Thank you. All yours, Priyal.
Good afternoon, everyone. I hope everyone is wide awake and enjoying the sessions post-lunch. So for this discussion, we'll be talking about something very unconventional. We'll dive into family offices investing in unconventional asset classes. And by that, we mean NFTs, cryptocurrencies, collectibles, and all of these asset classes that are creating some sort of buzz. So we have our experts, Juhi and Vatsal, to discuss this here. As we start the discussion, I would first like to ask Juhi, as the investment head at Scan Holdings Group Family Office, what is your perspective on these unconventional asset classes? And with your experience, how have things been investing in these asset classes so far?
Hi, Priyal. Thank you so much for having me here. I would like to start by saying that I think I come from a first-generation family promoters, and we see our investments in a very, very Marwadi way of looking at things. And we break down everything to the basics of the ABC, and we are not really encouraged by buzzwords like AI and, startup investing. There are a lot of things that one has to look at before starting to decide, okay, which is the asset class that we should be looking at. So as a family office, when we are evaluating our own assets, first step that we take is to analyze whether any instrument can be termed as an asset class. What I mean by that is, so we follow a very systematic way of analyzing any instrument as an investment. We follow a very simple 7-step method that I would like to share with the audience today. The first thing that we see is the physical existence of any asset that we are talking about, of any instrument. The second thing that we see is the authority or the credibility of that investment or of that asset class, and whether it is supported by an authority or supported by merely its existence. The third thing that we see, which is a very crucial factor, is transferability of that asset through generations. Because when we are talking about managing a family office, we are talking about generational wealth. We are talking about the fact that our next generations to come should be able to make use of that investment. So the third thing we talk about is transferability through generations. The fourth thing that we talk about is very importantly the fact that technology should not be able to alter the asset class. When we are talking about this, what we mean by this is essentially like ETFs, I think, is a very simple example of it. Gold was earlier traded in bricks. Today it is traded in ETFs, but the form of gold has not changed. It is still transferable as an asset. Technology has made it easier to invest in gold through ETFs, but at the same time, gold remains the primary asset class in this situation. The next thing that we talk about is the simple fact of demand and supply, which really exists across all markets, across all genres. And the last thing we talk about is really the reality of that asset in terms of, yielding results and yielding returns in a very risk mitigated manner. So we see every asset class on these 6 parameters. If even a single one is not met, we don't classify that as an asset. So we are very clear on the fundamentals that, okay, if these 6 parameters, every single one of them are check marked, then yes, we go ahead and call it an asset, and then we start to go to the next phase of evaluating whether that asset is good for our portfolio or not.
Right, thanks for laying that down for us. So I'm hoping that you keep adding new asset classes to this classification. My next question is to Vatsal. Because you have had the experience of investing in cryptocurrencies, both as a VC investor at 100x VC and as a family office investor, what has your experience been? And if there are any specific learnings from investment in this asset class?
Sure. Thanks so much, and such a pleasure being here with you and Juhi. Hey everyone. So how we've approached investing in crypto is to talk a little bit. We started investing or learning about the space roughly around 2015-16 when somebody introduced us to the concept of Bitcoin. We took our first Bitcoin way back, and we've not kind of looked back. Since then, we invested in a bunch of startups. In fact, I think one of them is sponsored today. CoinDCX is our portfolio. We were the first check. We were investors in Block One, which was the creator of EOS blockchain, and they had like a $4.5 billion ICO. That's like $4.5 billion they raised and had cash in their bank from retail investors. We've seen that entire ICO craze. We saw the NFT craze recently, et cetera, et cetera. Fundamentally, what we've learned about this space and what our lessons have been is it's twofold. One is, if you're investing in a company related to this, it's better to own equity. We're not big fans of owning tokens, at least, because a lot of value accrual still happens in the holding company. And that's the best way to kind of, at least in our learning, get a part of that value creation. The second is, if you're investing in a particular token or a particular kind of coin, cryptocurrency or project in it, make sure it has real fundamental value and is not speculative, right? Our learning and our reasoning behind, and so our focus has largely been now around two ecosystems. One is the Bitcoin ecosystem, which we're very bullish on, and Ethereum. To cut it short, we're bullish on Bitcoin because we believe it's a true alternative to the USD as a global reserve currency. We're already seeing US debt, federal debt, rise to historically high levels. Chinese government is no longer buying treasury bonds. Their interest payments today are higher than the defense spending. All of this fundamentally puts them in a very, very weak position to continue being a global reserve currency. And the fundamental problem is, it is impossible to have a fiat currency be both a global reserve and a domestic currency. Because if that is so, the currencies, as all economies around the world grow, the currency supply has to keep growing. And that will almost always grow faster globally than domestically, which means the government will always be in a fiscal deficit, right? We believe in Bitcoin, when we have a very strong thesis that eventually, if and when a black swan event comes, whether that's 5 years down, 10 years down, 20 years down, right? It is the strongest candidate to replace that. So coming back, I mean, that's our thesis, but unless you do not have a strong thesis on the fundamentals, do not invest in any asset class like this just for the speculation that, oh, it's going up and so I want to invest, right? I want exposure because everybody's investing, right? That's like the biggest mistake you make, because if you do not understand it and if you do not invest in it without understanding, you're bound to get your hands burnt, and then you'll be like, boss, I'll never actually ever invest in this space again.
Right, thank you. A quick follow-up to that. Does the perspective or does the route of investment change when you are investing as a family office or as a VC investor?
Yeah, so as a VC, you invest only in equity, right? So we invest only in equity. As a family, we're open to invest in either ways. As a family, we've been stacking Bitcoin for the last almost decade now, consistently. So every Dhanteras, we buy a bunch of Bitcoin and store it instead of gold. And yeah, that's how we approach it as a family. You just keep stacking sats. As a VC, you do have to think about liquidity. You have shorter timelines, et cetera, which is very different. As a family office, our approach is different.
I think also the fact when you are running a family office and you are solely responsible for your own set of funds, the flexibility and the liquidity are two very important aspects, because you just have the lenient structure and the, just the fluidity to move around from one asset class to another as and when you see an opportunity grow. But when you are in a structured environment where you are receiving funds from outside and you are deploying them on somebody else's behalf, your answerability to those set of people is much higher, and at the same time, you don't want to be bringing them to your level of risk appetite, that you might be okay to take that risk, but the person who is giving you the money to invest on their behalf may not be okay with that level of risk, So I think the scenarios may be different, I'm sure, for you in this situation.
I mean, it's different.
Sure. So as we move beyond cryptocurrencies, I think cryptocurrency is one of the most conventional among the unconventional asset classes, right? There are also new areas, haven't yet graduated to the level of an asset class, but there are sneakers, luxury watches, wine, collectibles that have also come up as areas where there is investor interest. So Vatsal, what is your view on that? Do you see family office demand in these areas?
Yeah, again, do not invest unless you understand it, and you have to really go deep to understand anything. This is a trend we're seeing as a family. We've been seeing for the last almost 15 years now, where it's, everything's getting securitized, everything's the financialization of everything, right? I mean, today, for example, people are betting on opinions like, will Biden drop off the campaign or not? Will Harris win or not? There's a company called Polymarket where you can actually trade on these events, right? And if they happen, you make a bunch of money. Your opinions are securitized. Real world events are securitized. Like you said, wine is securitized. We've invested in a company called VinoVest, which allows you as an investor to invest in a cache of wine, a particular vintage, a particular farm, or whatever you call it, so origin, a particular type of wine. And in fact, wine as an asset class has given consistently over the last 7 years, so 2015 to 22, about a 9% IRR, whereas whiskey has given a 13% IRR over that same period, right? Which is much better than a lot of public market funds. This may not make sense for Indian investors because we are accustomed to a much different type of public market, but in the US, this is like phenomenal. And it's a great way to diversify, right? And it's backed by a real asset that people want, and it's got the Lindy effect. It doesn't go bad. The only way is up with wine, right? Because it only improves and people value it more and more. We've seen securitization of sneakers, like you said. There's a company called, I forgot the name. But there's a company which is a complete exchange for old sneakers, right? Like Yeezys, etc. Now that's something you should probably keep a 20-year-old Gen Z guy in your family to invest in. Please ask them what are good sneakers to buy. They'll know. But the important thing to understand is the depth of all of these markets is not as much as a public market, etc. So your ability to actually deploy capital in these markets is not going to be as high. So these will be very small allocations in your entire portfolio, and that's how it's supposed to be, right? So you have to be very cognizant, and if you do invest in these asset classes, make sure you invest in markets like the US, right, where there actually is depth. India is nothing like the US, right? In India, the market for fine wine will be maybe a 50th of what it is in the US, right, where there's a much larger market for this. So if I'm investing in sneakers, if I'm investing in fine wine, make sure it's in a market like the US where there's real depth in that asset class, so that there's liquidity, so that there's real value creation and appreciation for you.
Thank you, Vatsal. Juhi, would you like to add to the perspective as a family office investor?
I think I completely agree with this mindset, but yes, it is true that the channels and the areas of investment available in India as of date for these different asset classes is much different. Also, I think the popularity of different asset classes really plays an important role. I have been to, I don't know, more than 100 events, and everywhere I go, the people who are the young entrepreneurs or the young people who are managing family offices is just a handful of people always. Always the family offices are managed by very experienced 30, 40-year-old professionals or industry experts who have been traditionally accepting more of asset classes like debt and equity and where they really see, they have seen the chain and the cycles go up and down through their experiences. So these kinds of asset classes where we are talking about the fact that, okay, let's invest in sneakers, it's a bizarre idea to them. And they're always thinking, why is this guy making me lose all my money? I have earned it the hard way. I don't want to be buying sneakers and then just see my money vanishing. So I think these are more new trends which the millennial and the Gen Z populations understand in much deeper depth than our parents or elderly people in the industry understand. But obviously, when we are talking about different asset classes, the 7 parameters that I talked about in terms of investing, setting that as the benchmark, evaluating each asset class in that light, then matching it with your key 4 objectives of the family office in terms of your objective, your risk return, risk appetite, your return expectations, and the time horizon that you have for making these investments. I think the channels play an important role where you are able to find the depth of the market to put in that kind of money, or how easily are those securities tradable in the market, how easily are you able to get those kinds of deals to your door and evaluate them, and how big of a group there is to support your investing in those ideas. If there are 10 family offices who are willing to make a deal and then enter a deal together, the kind of confidence and the kind of trust you would have in that deal would be much higher than somebody independently trying to negotiate a deal for such new asset classes.
Thank you. I think you very rightly pointed to the aspect of tradability. I'd like to understand both of your views here. Do you think any sort of regulatory changes can be brought in to make these asset classes or these 2 areas of investment more tradable in terms of cryptocurrencies or the others?
I'd rather not answer this.
I think it's a very, very controversial question.
No, I mean, listen, I think in India, it is very important the way regulations are kept are important, because while us as family offices have the resources to deploy in these, wacky ideas and wacky asset classes, a lot of retail investors are in fact scammed and lose a lot of money because of this when they don't have any education. So I don't think it makes sense yet in terms of deregulating the space or making it easier for people to invest. Maybe having some checks on, or deeper checks on accredited investors, and ensuring that only those who have those accreditations can invest through verified platforms, regulating on-ramps, off-ramps into these would be a good idea. That would, I mean, for example, with crypto, we're expecting, CoinDCX has been actively working to self-regulate even before any actual bill is passed on how you're supposed to do it, how you're not supposed to do it. And I think those are the kinds of steps you want to see, right? You want to make sure that when we grow an asset class in the country, it happens in a sustainable manner without, without hurting those, without the means to take the risk, right? So I don't think, honestly speaking, that whatever regulations exist are bad. I don't think there are any changes needed. As an industry, we will, in every asset classes, if the asset class sees depth and sees demand, they will learn to lobby and talk to the government and figure out a way which is good for all stakeholders involved.
I think also the fact that we Indians in general have a mindset that if anything at all goes wrong in an asset class, we hold the government responsible. So I think just keeping that in light, if anything wrong happens for any of the investment decisions we make, we want a security in terms of how the government is regulating that, right? So I think it's just the way that Indian industry and Indian markets have been moving, regulations have been an inevitable part of that chain. And there is always this sense of security that, okay, if anything goes wrong, we have the government to hold responsible for it, and the government should do something about it, so that at the end of the day, a regular investor is not losing money. So I think irrespective of the asset class or the segment of the industry, I think regulations in a country like India are good in a way because they keep you protected. And also, a lot of times, in a country like India, we can't have things like GameStop, right? And you can't have 100x in 1 week or 1 month, and then you can't have a fall of 90% in another day. So I think that's those small regulations which might seem restrictive at some point of time are also the ones which are keeping the investors safe and in the game for a longer duration of time.
Right. So from here, I want to get to the core idea behind this discussion. If at all there is demand, what is driving family offices towards these areas of investment, cryptocurrencies or the others? And do you think that the Indian market, Indian family offices are ripe enough to start investing in these areas or allocating a larger portion of their capital going forward?
Yeah, I think this is important from a diversification, at least from our point of view. If you really want to generate alpha, you're going to have to take a few high risk, high return bets, right? And once you keep growing, right, you want to take money off the table. No asset class is risk free. It's not like if I have my money parked in multiple ETFs, public equities, debt, it's like risk free, right? Tomorrow something happens and Indian markets, which are already fairly overvalued, right? We have 100 companies with 50 PE multiples already. You don't know what happens to your wealth. So it's important to kind of keep taking money off the table, hold some cash, hold some other asset classes, seek out alpha elsewhere. But you have to be cognizant and ensure that the money you're investing is something you're willing to lose, depending on the asset class. So if it's startups, for example, this is highly illiquid. So I would not recommend more than 5%, right? Saying that that's it. 5% is my investment budget for this year. So usme se X amount, uska 5% is all I'll invest in startups, because that's money I can just mark it down to zero. Okay, it's gone already. With a Bitcoin, I can do a larger chunk if I want, because I know it's still liquid. While I may still see value erosion there, it's not illiquid, where if required, I can take money off the table, right? So you have to plan accordingly. Why family offices and why we take it is because to seek some alpha beyond what is already available and to diversify. And I think that's why Indian family offices should look into it. But, like I said, a lot of these asset classes are also not available in India so at this point in time, right? And having invested in some of these outside of India, I think it allows for better geographical diversification as well, right? Owning a bunch of wine in the US is an asset you have if and when something goes wrong with our country, or having some real estate in Europe allows you to much better plan your things out if there's any national risk that comes about.
Thank you, Vatsal. Juhi, your views on that?
Well, when we are talking about what is driving these, I really think it's the charm to be diversified in multiple assets. It's just, you just have this feeling that if you're not diversified enough, or if you're not exploring these, then you're missing out on a lot in the market, available in the market. So I think this charm is broadly driven by two factors, which we often talk about in the investing world, which is fear, and the second one is greed. So the greed simply because of the fact, because you want to be making that 5% or 10% or 20% extra when you see the other person making it, and you see, why am I not in that game, right? So that's the greed, that you want to be a part of the section where you are able to also generate an alpha and be all gala about it, and just also maybe go and show it off to your industry friends that, oh, I can generate this much return. Second is, of course, the fear, where we are talking about the FOMO act, which has been the FOMO fact, which has been going on since morning, that you don't want to be missing out on opportunities. I think the way we see it is, as a family office, I think structure and discipline are two very essential elements of running a family office. Why we talk about that is because unless you have a guideline with clear objectives, you can be thinking of 100 different products to invest in. Like Vatsal said, investing in US or investing in India, or maybe investing in wines in France can be one option, but then does it fit your objective? Does it fit your agenda? Is this the goal? You understand? So if it is, then it's great. You should be evaluating these options. And I see it to every family office or anybody who is related to family offices anyhow, that every deal that comes your way should be evaluated. But at the end of the day, you have to see where that fits in your objective. If it fits well, then, and you're not taking that opportunity, then you are missing out. Then you are not a good manager, because then you are just scared of the unknown. But then if it fits in your agenda and if it fits in your understanding and you do it, then you are smart to diversify that portfolio.
Thank you, Juhi. Now, this is my last question to both of you, a quick one. I want to get your understanding as to your view. How do you think, the evolution of these asset classes will be like in the next couple of years, maybe in the near term? Do you expect a spurt in the uptake or interest in these asset classes by family offices, essentially?
Unfortunately, I think, we're still going to see a lot more financialization of everything happening in the next at least 5 to 10 years. So a lot of family offices will have to look at and understand these asset classes. How many of them will have enough depth, I don't know. But a lot of security, it's just going to proliferate. I think the most important thing is for family office to know it's okay to let go of 2% of alpha as long as it lets you sleep in the night. So there's going to be 50 different opportunities that are going to come in the next couple years. You'll hear about investing in AI chips. Like I've heard of companies that have pitched to me saying, oh, we're raising an equity round so we can buy NVIDIA AI chips and then rent them out to other people and stuff like that, right? And so you're going to see a lot of different models come your way. I would rather sleep easy at night than, worry about that 2% alpha for me. So do it, but make sure you can sleep easy.
Thank you. Juhi?
Yeah, I think Indian market is really maturing a lot in terms of avenues that we have started to see for different areas of investment. Of course, there is no end to it, and there is a very, very long way to go. But I genuinely feel where we were in these markets or in these product categories 10 years before, we are much more ahead of it today. And I see this progressing at a much faster way tomorrow for two simple reasons. One, because the number of family offices is increasing. That is a simple reason which we talked about even in the welcome note, that today we have 300 family offices. I am sure in the next 5 to 10 years, this number is going to go up to at least 600-700 or even more. That is one thing. Second thing is also because I think slowly and steadily, the acceptability of different asset classes is increasing in the family offices because of the new generations coming in. So anybody who may be a part of the operational team also but understands these asset classes is encouraging their families to look at them in a more positive light and to at least evaluate them in as diversification of their portfolio. So I see that growing, and I also see different channels being built through different brokerages, advisory houses, fund houses who are also coming up with this because they have also started to realize the potential of family offices in India and they want to bring them on board. So I think this will grow and this has a future. It just needs to be in a more, in a better guided manner, and of course regulations can never be ruled out.
Thank you. Thanks for your perspectives, Vatsal and Juhi. Now we have a few minutes. We can take a few questions from the audience. There seem to be none.
I think we put everybody to sleep.
Hi Vatsal, this question is for you. At one side you are talking about 50 PE, at another side you are talking about Bitcoin. I don't understand really, like, or you are talking about Bitcoin because this has liquidity only. What is the base of this Bitcoin?
This is a much longer conversation. I can guide you behind the. I have contributed, attempted. My code has not been accepted yet. I've attempted to contribute code to Bitcoin. I understand the code behind it. I understand the algorithms behind it. I understand the software. That gives me confidence. This is not a trustless ecosystem. It's a trust on code ecosystem. And this is code I can read and I can understand. But this is not a conversation I want to get onto on stage because
ED वाले भी देख रहे होंगे कहीं ऐसा ना हो ED वाले देख रहे हो भाई.
Sure.
I think with this, we have a question. Thank you.
So this is a question for both the panelists. So Vatsal, you mentioned with regards to public markets, I also run a public markets-based family office, where you said there's fair proportion of stocks at 50 price to earnings across the board, you're not seeing value. But my argument to you is this, okay? If you look at the current positioning, a lot of equity mutual fund schemes are sitting on a huge amount of cash. That has to be deployed in some way or another. As long as I'm fairly confident that my earnings cycle is not going to compress. I mean, if you look at the large cap tech earnings in the US, you actually had a derating of earnings, right? And that rally is very narrow because it's only been driven by the Magnificent Seven. In India, I think your corporate earnings have been a lot broader. So, really when you mentioned to me that this is a 50, 60 PE stock, it's overvalued, I don't quite buy the argument because as long as my multiples are not going to compress, and I'm fairly certain that my earnings are going to continue to grow at about a 20, 30% CAGR, or even if I take a low teens estimate, right? Are you telling me that something like an Asian Paints, which has always historically traded, anywhere from 50 to 70?
Sir, is there a question or is it just a rhetorical question?
No, I'm asking you that, it's a question also for you. That
So if you want to beat me down, we can do it separately.
I'm not beating you down. I'm just saying that the perspective on multiples has to be rethought in terms of whether you're thinking of it from a multiple compression, maintenance, or expansion perspective. That's all.
Thank you so much.
Yes, we have one question.
Hi, Vatsal. I just wanted your take on the recent, I'm sure you would be aware of the VCCircle event that's just happened. So just want to understand from the security perspective, what are some of the measures that you take for your coin holdings that you have? Do you have them in the cold wallets or do you do something separately?
We have it in cold wallets.
So this is all your
Yes.
all your coins basically?
Yes, we have a multi-sig cold wallet.
Okay. So would you suggest everyone to have that? And so you're an investor in CoinD6, which is a competition to VCCircle,
Yes.
right? So what's your take on, something similar happening with CoinD6 as well?
I mean,
on the security front.
the founders are great, Sumit and Neeraj. We've known them for a long time. They've put in 200% more work than anybody else on security. But I think in the long term, if once your ownership starts crossing a significant percentage, it is better to take it off chain and keep it offline if you can, if you know how to custody it yourself. But otherwise, I do not have any concerns as of now about CoinD6. VCCircle is an unfortunate case, but the fact of the matter is with VCCircle, ownership, who owns the company is there's a proper leadership gap there. If you can see, there was a whole thing in 22 or 23 where Nishchal was saying, okay, Binance owns us. CZ is saying, we don't own VCCircle at all. So who owns it? Who's running the company? Nobody knows, right? Despite it being large. Were they compliant as a VDA services provider? No, I don't think not until recently, at least, for Indian investors. So a lot of questions were there. In that sense, I feel much more comfortable because DCX is the one who we know for a fact that Sumit and Neeraj have worked hard from day one to work with the regulators, and they were the ones who pushed through the Supreme Court order which came in 2020 or 2019, I think. And they work with the regulators, and they've consistently been working. They've self-regulated, like I said, worked very hard. They have a public, in fact, their reserves are public. So you can, at any point, just go on the internet and say CoinDCX reserves. And they have an online counter where they can show that these are the number of coins we have, this is the value of the coins, this is what we hold in our wallets. It's open, it's public knowledge. So they're the ones trying to actively at least show that we're security first, we're compliance first, and we take security of funds of our users very seriously. So I don't have any concerns with that as of now.
Thank you, Vatsal. I think with this, we'll close this discussion. Thank you, both of you, for your very helpful insights. I hope everyone enjoyed the conversation.
Yes,
Thank you so much.
we certainly did, Priyal. Let's have a huge round of applause for Vatsal and Juhi. Thank you so much.